With the rise of the ongoing war with Iran, prices of oil nearly doubling in the span of 3 months, the Nasdaq and the S&P hitting record-breaking highs, and a time where any update by Donald Trump can drastically change the markets.
When the ceasefire ends, will you extend the ceasefire or will you start attacks again?
Maybe I won't extend it.
Okay.
But the blockade is going to remain. But maybe I won't extend it. So you have a blockade, and unfortunately we'll have to start dropping.
As a trader, it can feel like, what is going on? And that's what this video is here to clear up. See, because despite everything we have going on, we're still able to make money. And I even passed another 50K funded account this week. But the best part is, I was able to position my team to capitalize as well. And take buys here. Go on break even here, chat. There we go. Bang! In this video, I'm going to explain exactly how we did it, walking you through the trades, how the war affects the charts, what to expect next, and most importantly, the mindset behind each decision that we made this week. And by the end of this video, you'll have the answer to two very important questions. What the heck is going on, and how can you capitalize on it? Okay, so the first two things you need to know is what is going on with the war and how it affects the charts. And I'm much more concerned about the second question. On February 28th, the US and Israel set out to destroy Iran's nuclear development program with the goal of a regime change. And on March 3rd, Iran decided that they were going to leverage control over the Strait of Hormuz, which is a vital energy shipping lane. Think of it like a highway where 20% of the world's oil has to travel through, and Iran essentially dumped an 18-wheeler smack dab in the middle. So what happened to the price of oil? Well, in the span of 3 months, it doubled. But why? Well, if oil can't get through, then that means the price of a single barrel of oil will increase. If tension rises, then oil spikes. But if things calm down, then oil will drop, and it'll drop fast. That's why we've seen when there was talks of a ceasefire, the price of oil went from 112 all the way down to 81. But over the weekend, Iran announced that they were going to be establishing control over the Strait of Hormuz. Okay, so what does this mean for our most common assets? Well, if tension rises, then oil spikes. If things calm down, then oil will drop. Now for gold, war equals fear. So when there's talks of war, gold goes up, while de-escalation means that gold typically goes down. For the indices, well, war headlines, the market dips, especially for the Nasdaq, which we've seen open with a gap last week, when it was announced that the US was forming a naval blockade of the strait. And this was crucial to how I was able to pass my 50K funding challenge, but more on that later. For the USD, it generally strengthens during uncertainty. Now, knowing all of this, how do we actually capitalize this previous week? Now it's time to get into technical analysis. Over the weekend, Trump had announced a naval blockade of the Strait of Hormuz, which we talked about can dip the markets, specifically for the Nasdaq, causing a gap down over the weekend, which I made sure to warn our traders about before the market opened. It was announced that Trump is now having a naval blockade of the Strait of Hormuz, removing mines from the strait. And what we could actually see on the market open, it potentially a gap down. Any sentiment like this is a bearish sentiment for the stock market, and we can actually see the Nasdaq and major stocks actually tank on the open. So keep an eye out for the move on the open here and potentially look to capitalize on some of these moves. But you need to learn how gaps work. A gap in the markets is formed when price either opens lower than it closed, which in this case it did, or it opens higher than when it closes. Now, oftentimes these gaps are seen over the weekend, and just because the market is closed doesn't mean that price can't keep moving, as we've seen before. News events released throughout the weekend can also cause the markets to continue to move. So when it was announced that Trump was going to be blockading the strait, this was a bearish sentiment for the markets, causing the Nasdaq to open lower than what we had closed and for there to be a gap in the markets. Now, this is the first thing that you need to know about gaps. Well, more often than not, gaps get filled. The Nasdaq ran extremely bullish this week, pushing to all-time highs, which was up here at 26,864, which we were able to capitalize off of in our VIP. So now what I want to do is break down the exact trades we took this previous week, how we were able to capitalize on them. I have a very simple system that I use known as the Ace Trader method. A stands for anticipation. C stands for our confirmation, and E is for our execution. We're going to walk through each phase of this and how we actually executed on the chart so that you can replicate it and execute it for yourself. So the first thing that we have to do is anticipate what the markets can do. And knowing all that we know about gaps and the rising war, we anticipated the market would go back up. And I actually told the team that it wasn't a matter of if we break the all-time highs, it was a matter of when. I want you to think of the markets like a magnet. The larger time frame is going to show you the overall pull of the magnet, and it's our job as traders to find a spot on the wave, and that's exactly what we did. So I'm going to show you the trades that we took this week, walking you through it step by step. So taking a look at the NASDAQ here, we had already filled our gap here, right? And price was going up. We want to check in at 9:30 a.m. Eastern Standard Time because this is when I actually want to be executing in the markets. So you can see here on Tuesday that we were clearly creating higher highs and higher lows within this bullish market structure. So that means that I'm expecting on the market open for us to potentially continue going up. The only thing that would flip this lower time frame structure, and we are on the 15-minute time frame here, is if we actually broke through this low here at 25,616. So what I had to do is we actually need to wait for our 9:30 open. What happens at our 9:30 open? Well, this is when the New York Stock Exchange open, and this is when the big money actually starts trading. So we oftentimes see a spike on this 9:30 open, and it's very, very crucial that we don't look to take trades before this because we don't know which direction this spike can go. We have a thesis as to where it can go, but we're just not too sure, and we want to wait for that confirmation. So you can see here it is currently 9:25 on the 5-minute time frame, and we wanted to wait for that 9:30 candle open. And look at how much volume we had on the first 5-minute candle that closed on our 9:30 open. This was a good sign for us that we could actually continue to push up. So what exactly was I looking for, and what did I tell my team that we were going to be looking for? Well, we have our area of resistance right here. This is our previous high that price had created. And you can see with this candle here, we actually broke above this high. Now, what we wanted to see now is a retest of this area of interest high, and then we could actually look for price to continue going up. Now, remember what I said about the larger time frame being your magnet. We want to actually understand where could price gravitate to and where could it go. Now, taking a look at our 4-hour time frame here, we were at a key area of interest in the markets. So on our 4-hour time frame here, we had just tapped into a key area of resistance, which was at this 25,700. My team knows that I love my solid hold number. So 25,700 was the actual area that we needed to see price break above. If we broke above 25,700, and you can see here just how strong of a reaction we get every time that we tapped in to 25,700. This let us know two things. One, that 25,700 is a strong level. And two, if we can get above 25,700, the next nearest level of resistance is going to be up here at 26,236. So this is where we would anticipate price to gravitate to if we can stay above this level here. So what I do is I mark out that zone simply like that. So coming back down to our lower time frame here, you can see that at this 25,700, that's what we actually got a break of. And that's why we want to see a retest of this level, because price has already showed me that this is a strong level in the markets. So if we can actually come back to this level, I want to see the reaction that we get off of this level here in order to take potential buys. So now we move on to C, which is our confirmation. We've already broken above our area of interest here. Now, what is our actual entry going to be? Well, we need for price to give us that retest back into this level here. And what did we see happen? Well, price just continued to push up until we actually got a move to the downside here. So you're going to see here, price pushed all the way back to the downside to retest that strong level that we were looking for. Now, how do we actually take our entry? Well, you don't want to just buy on this retest here. You actually want to wait for your candle confirmation. And for me, this is going to be a 1-minute bullish candle off of this area to show me that, hey, look, price is now ready to go from being bearish to now being bullish. And we know that since this is a larger time frame key area, that we could see a pretty strong reversal from this level. When we actually got this candle here, this is when I went ahead and I took a buy in the markets. Now, how I'm going to take my buy is I'm simply going to buy here, and I'm going to set my stop loss right below this area of interest low. Now, we have that larger time frame target all the way back up here at 26.27, but that's a pretty big ask, right? So where am I actually going to take my first profit target at? my first profit target is going to go up here at this area of interest high. So this is actually where I'm going to want to get out of 80% of my trade, and I'm going to leave 20% to potentially run to that larger time frame target. You can see here with my trade, this would offer me a 1 to 3.4 risk to reward on this trade. And what was the result? Well, price immediately started to run up to the upside and hit that target there. What did I do from this moment? I went ahead and moved stop loss to break even and let the rest of the trade play out. We've seen a slight correction form, but then price continued to push to the upside. I actually got taken out at my runner here, but what happened, and did we actually push to that larger time frame target? So if we zoom out here to our larger time frame, we can see just how price reacted throughout the rest of the day. So price did continue to go up, but it still hasn't quite gotten to our key area of interest. But that's okay, because we were just about to start the new session for our new day. So how did we actually execute on our trade on Wednesday, which we took live with our members? Well, on Wednesday, we seen that the price of the markets had gone up extremely, and then we started to die out here around this 2640 level. And what we really wanted to see was a break above this 2640 level. So if we dial down to our lower time frame, you can see that on a market open, we had a push above this level, and then price immediately rejected off of that level. So then we just had to wait for price to get back above this level. Again, we need to see price stay above this level in order for us to actually execute on our trade. So from there, it was just a waiting game. You can see here that our 5-minute candle just trying to get back above that level, but we still couldn't quite get back above there. So we just had to wait and be patient. So if we take a look here, now we can see that this 5-minute candle closed above that 2640 level, right? And now what we want to do is dial down to our 1-minute time frame, and we want to see how price reacts off of this 2640 level. If we can get a bullish reaction off of this 2640 level, then we're going to actually look to take longs. The first candle actually closed as a bullish candle, and I told my team on the next candle, if we had broke above this area of interest here, I'd be looking for a buy. If we break back above this area of interest, I'll set a buy. All right, we're back above. I'm going to go ahead and take buys here. So that's what we're actually going to set up here. And what did we see happen? Well, we got activated in this trade here. Well, where does my stop go? It goes below this area of resistance at that 26,039, right? Because price has shown us that, hey, look, we're respecting off of that larger time frame 2640 level. So this is the safest place for it to go. And likewise with my other trade, my first target is going to be at the area of interest high, while my second target is still going to be looking for price to gravitate to our immediate next key level. And what is that immediate next key level going to be? Well, we're going to be looking for some resistance off of this solid whole number at 26,100. And so how did this trade actually play out? Well, you can see here that we immediately started to push up, where we was able to move stops to break even. I mentioned to the team that if this candle high gets broken, that we would likely see this area of interest taken out and price can continue ripping up. If we see this candle high get broken, it's likely that we go ahead and we take a little bit of profits there. So we do need to see that happen. And that's exactly what we did. I went ahead and closed 80% of my position there, and I left a portion to run, which then came and took me out at break even almost immediately. But then where did price go? Well, it pushed all the way back up to that 26,100 level. And this is actually how we set our targets, right? So we're utilizing our lower time frame to look for our confirmation, but our larger time frame is where we're going to be looking for our targets to head to. And if you guys want to join our VIP, you guys can join our VIP for 7 days completely free. The link is down below in the description. And if you want to be mentored by me personally, where we have one-on-one sessions, you guys can click the application below, but we can only accept 5 people a month. And we want to make sure that we are getting the best possible candidates, people who are actually committed to their trading progress and willing to invest in themselves, right? We hit that larger time frame 26,200. Again, remember, that is the area where we've seen some resistance off of in the past, and that's where we was expecting the price to naturally gravitate to this week. So again, you're starting to see how we're utilizing these larger time frame areas of interest to actually capitalize and use for actual targets. Okay, so let's look at one more trade here, the trade that we actually took on Thursday. And this trade was a little bit different than the other trades that we had seen. So again, we're here just before the 9:30 open, and you can see that price was extremely bullish the previous day, but we do see something happening here. Well, what is that? Well, price went from creating higher highs and higher lows to now creating a lower low, lower high, and again, another lower low. So what does this actually mean? This means that our lower time frame structure is now going from being in a bullish market to now being in a bearish market. And this is going to be a bearish corrective wave. So what is a corrective wave? It is a slow, low volume move that goes against the direction of our trend. So in this case, our trend was actually bullish on the larger time frame, but on the lower time frame, we had a confirmed sell. And what do we have to do? Well, we have to wait for that 9:30 open. So let's see how the 9:30 candle actually opened. Well, we opened as a bearish 9:30 candle. And so then it was then that I told my team that, hey, look, if we actually break below this low here, I'll look for a correction based trade to the downside. If we break back above this area of interest high, which is our key high, and why this is our key high is because this is the area in the markets that would actually flip us from being in a bearish corrective structure to now a bullish continuation structure. And that is a continuation of what our larger time frame move is, which we know it's bullish. So what does that mean for our corrective structure trades? Our corrective structure trades we can take. Generally, we either want to reduce risk or we want to make sure that we're moving our stop loss to break even as quickly as we can. And we're getting out at our key areas of interest. Why? Because at any moment, price can continue in the direction of our trend. So though we can still capitalize on correction structure based trades, they can tend to be a little more risky, which is why we want to make sure that we're going ahead and we're taking our profits. So we actually had to wait for a break below the low. And what did we get happen? Well, price actually broke below this low. Now we just had to wait for our confirmation. And what's that confirmation going to be? Well, I need price to retest this level and then break back down below. And so what did we see happen? Well, the first candle extremely bullish after this level, but we still want to wait. Then price pushed down extremely. What did we get next? We got a retest and price pushed up. So it was then that I told my team that, hey, look, if we hold below this level here at 26,400, which is a nice solid hold number, then I'll look to take sales if price gives me my bearish confirmation. And what do we see actually happen in this area? Well, price pushed up, but we still haven't broken above this level here. And then what do we get? Well, we got a bearish candle to close. And so once we got this bearish candle to close, this was my indication that price could go to the downside. And so what I did is I took a sell here with my stops above this high, targeting back down into this low. So what we're going to do is we're going to set this sell here, and then we're going to set our stop loss back above this area here. Again, targeting this area of interest low and actually a little bit lower to break through. So what I did with this trade is I actually didn't set my take profit because I wanted to see how price was going to run once we broke through this low here. And what did we see happen? Well, price began to chop up a little bit for us here. We actually got a move to the downside, price pushed back up. And when we got this move here, I went ahead and moved my stop loss to break even, taking the risk off of my trade. Why? Because I didn't want to have any more risk on this trade, especially since we just had so much volume here. Price shouldn't go back. Instead, it should probably break through this low and continue pushing us down. And that's what I mentioned to our team. So what did we see happen? Well, price began to break through with a ton of volume. And it was actually at about a 1 to 3.5 where I ended up getting out of my trade, calling it a day there. Now, remember, this was a corrective structure-based trade, which means that at any given moment, we could see price continue in the direction of our trend. And what do we see happen throughout the rest of the day? Well, price pushed down a little bit, and guess what? It pushed all the way back up. So this is how we are actually capitalizing in the markets. That wraps up today's video. I hope that you guys got some type of value out of this video in any way, shape, or form. And if you did, be sure to like and subscribe to the channel as it helps us to grow this community. We want to spread this word out to more people so that more people can start to understand how the markets works and how we're actually able to make money and capitalize. As a bonus, comment one thing down below that you learned and it might help another trader. I greatly appreciate you guys, and I'll catch you guys in the next video. Peace.